Hi there, I'm Tyler Ballhorn, and this is the Stockscores Market Minutes for February 23rd, 2015. This week I want to talk about mistakes and how to fix them. You know, trading is simple, but it is not easy. A good strategy that works on paper or works in backtesting can fail because of simple execution problems. You should, on a regular basis, identify the trades that met your strategy rules and what you should have made if you had followed those rules, the trades you should have executed. Then compare with what you actually did. And then finally do some analysis to figure out what caused the difference between the expected or theoretical returns and the actual results. There will be a number of sources to your mistakes. A lack of confidence causing you to not take the trades that your system recommends. A lack of focus, simply missing on trades because you're not sharp or not following the market closely enough. Fear is often a reason to not take a trade, but also the fear of missing out is a reason to take a trade that doesn't fit your rules. Greed will cause you to take on more risk than your system predicts or that your system allows. Do you have the right tools to find the opportunities in time so that you don't miss the trades that meet the requirements of your rules? Are you slow on execution? And is there too much slippage? You know, oftentimes a system will work on paper, but when you actually execute it in the real market, the slippage will eat up all the profits, either because of a lack of liquidity or the commissions simply outweigh the profits on the individual trades. So you have to first identify the trades you should have made and then look for the reasons why you did not make those trades. And then you're on the way to fixing your mistakes. All right, let's get into this week's analysis. The S&P 500, another up week inside that long-term upward sloping channel. And what's important is that it managed to move through the resistance that we talked about last week, and it is now at new all-time highs. This market continues to be in the control of the buyers. The weakness this week was the real lack of volume. Although the market went higher, it drifted higher. It didn't do so with a lot of enthusiasm. Primarily, I believe, because of the issues around Greece in the European Union. Those issues may have gone away this Friday. There's some positive steps made in that direction, and I'm hopeful that we'll see an increase in volume next week. You can see that lack of volume on the intraday chart. Here you can see the drop off in volume over the last couple of weeks. Now this spike in volume at the end of today is a little bit misleading. That's largely related to the unwinding of options expirations, and so don't be swayed. The volume this week was very light. Here's a chart of the Russell 2000, which is now also at all-time highs, and I am starting to see that there is money coming back to the smaller cap stocks. You're seeing more stocks under $10, $15 starting to do well. I think it's still very early. There's not a lot of great opportunity yet, but the trend, I guess, is a positive one. But also look at the volume on the IWM, the lowest that it has been for months, and that really tells the story. There just wasn't a lot of buyer enthusiasm this past week. TSX rallied failed to rally higher this week and is still kind of sitting underneath that longer term resistance. We saw some money coming out of the energy bounce back. Oil has rallied up to its downward trend line. I'll show you that in a moment, and that really kind of took some of the wind out of the sails of the TSX comeback. And so I expect that we're going to grind our way sideways. Now when we look at the intraday chart for the last month on the TSX, we see a breakdown from a falling wedge pattern. I've drawn that green upward trend line, and that was broken on Wednesday, and that starts perhaps a little bit of profit taking, or maybe it'll just be sideways trading, but I do think the bounce back in the TSX, largely led by the energy comeback, is going to take a breather in the short term. The TSX Venture chart, I've shown here a daily chart. Normally I would show a weekly, but I wanted to really give a sense of what's going on over the last 6 or 8 weeks. And we do see some stability and the slow building of rising bottoms. The volatility is very low. There hasn't been a lot of action in the TSX yet, but it is trying is the key word, to make a bottom and perhaps turn around. You want to watch for a break through the 700, 710 on the TSX Venture Composite Index. You just punch that into Stockscores, $JX, and you can get that index. Here's a chart of the U.S. Treasuries, another pullback week in U.S. Treasury bonds, which means interest rates went higher. and there's still some distance to fall before the US bond market comes back to its long-term upward trend line. Therefore, I don't think the selling is necessarily done, and my expectation is that interest rates could still come up a little bit more, at least in the corporate bond market. US dollar was up a little bit this week, but is still well above its upward trend line. That tells me that there's still more of a pullback to come, and I think this is a positive if you are interested in markets like oil bouncing back, because there's a very strong correlation between oil and the US dollar. So oil was off a little bit this week and the US dollar was up a little bit this week. There is no fluke in that. Here's the gold chart. You can see that we continue to move lower on gold, and although some of the gold mining stocks are actually not doing too badly, gold is really having some difficulty breaking that long-term downward trend line. Now, it is at support. You can see I've drawn that green line of support. I could have drawn it a little bit differently, so there is the potential for a little bit more of a pullback in gold, but it should try to bounce soon. We'll see if that materializes. Finally, here is oil. You can see that it is fighting with its downward trend line. Now, last week we talked about the fact that it had risen up to that trend line where it was likely to find resistance, and that's exactly what happened this week, closing below that trend line. So the encouraging thing is that oil has been building a rising bottom. You can see that the lows of the last few weeks are around 11 on the OIL ETF, and the market low was closer to 975, let's say. But what's important is that this market breaks that downward trend line, and until it does, we have to be pretty cautious here. I think the first bounce is in. The question now is whether it can break that downward trend line. Here's the chart of the fear index, and you can see that we have broken the upward trend line on fear, which means that there is less fear, and therefore that should give the buyers some motivation to start to act, and hopefully we'll see some volume come into the market next week. So my ratings then: bullish on US stocks, neutral on Canadian stocks in both time frames. Gold neutral long term, bearish short term. Oil bearish long term and neutral short term. US stocks are at an all-time high, but volume is light, indicating the buyers are not too enthusiastic yet. Canadian stocks are likely to head sideways or lower in the near term as oil struggles with its downward trend line. Oil is a big, important market for the Canadian stock market. Gold weakness should bounce soon. We'll have to wait and see if that happens off of support, as gold has fallen for a few weeks in a row now. That has been the Stockscores Market Minutes for February 23rd, 2015. Have a great week in the market and trade well.